If you've lived in San Diego for more than 5 years, you know the salt trap has been an absolute vibe killer since 2018. We've been stuck with that $10,000 cap on state and local taxes, which, let's be real, barely covers the property taxes for a one-bedroom condo in North Park these days. But check it, for the 2025 tax year, the game has changed. We've got this new law, the One Big Beautiful Bill Act, or OBBBA if you're into acronyms, and it just blew the doors off that old limit. We're talking a jump from $10,000 to $40,000. Quick refresher for those of us who'd rather be at the beach than reading IRS forms. SALT is just your state and local taxes. When you itemize, the IRS lets you subtract what you already paid to the state from your federal bill. For us in San Diego, that's your California income tax, which we know isn't cheap, plus those property taxes. Before, even if you paid $30,000 in local taxes, the IRS basically said, cool story, you can only write off $10,000. Now, you can potentially write off the whole thing up to 40 grand. That is a massive shift for San Diego homeowners. Now, don't go out and order a custom mid-length just yet. There's a catch. The OBBBA is basically aimed at the middle and upper middle class. If you're pulling in high-tier executive money, this benefit might pull a disappearing act on you. The full $40,000 cap is for people with a modified adjusted gross income, your MAGI, under $500,000. If you're married filing separately, that threshold is $250,000. Once you cross that $500,000 line, the phase out kicks in. It's like a 30% tax on your deduction. By the time your income hits $600,000, your SALT cap has officially torpedoed back down to the old $10,000 limit. So the extra beauty in this bill is really for the folks making under $500,000. Here's the biggest mistake I see people making. This $40,000 cap only matters if you actually itemize. See, under the same law, the standard deduction also got a boost. For 2025, it's $31,500 for married couples and $15,750 for singles. If all your write-offs, your SALT, your mortgage interest, your charity don't add up to more than that $31,500, you're still better off just taking the standard. The $40,000 cap makes it way more likely that itemizing will be clutch for you, but you still have to run the numbers with your pro. One more thing, this isn't forever. This higher cap is only locked in from 2025 through 2029. Unless Congress does something else, we're headed right back to that $10,000 limit in 2030. If you're planning on buying a property or you have a big tax bill coming up, you definitely want to time your moves within this 5-year window to maximize the write-off while it's here. All right, quick recap. The cap is $40,000 now. It starts fading once you hit $500,000 in income. You have to itemize to get it. Tax laws move fast, so definitely hit up a CPA before you send it. If you're trying to figure out if your specific property taxes or income hit that sweet spot, shoot me a DM or just drop a comment below. I'm happy to help you navigate the math so you don't leave money on the table.